Hello there, this is your boy Rex here with Sutton Capital, with Sutton Trades, also known as Trade Gains in general. Today I have a wonderful episode to present to you, mostly focused on United Health, UNH, and whether it makes sense to take a position now, considering the price it's at, where it was, and where it could be moving forward. So, just before I start, please remember that none of what we talk about is financial advice. This is for purely educational purposes, and we are just looking how to analyze together a stock and decide yourself if it makes sense or not for you to take a position. So let's dive right into it. So today, United Health Group, UNH, is trading at a cool $310. Now, it went as low as you can see right here as like 250 essentially, well 240 technically. I think that's about the lowest it's been in a very long time. I mean, like over 5 years, right? I mean, you could have bought this. Yeah, you could have bought this in like 5 years ago, and literally it's down. I mean, let's look at all time. If we really well, all time it did quite well. I mean, this was wow. Who would have thought? This was 36 cents. Anyway, but that's normal. I mean, it just shows that United Health. I mean, this is the biggest insurance broker in America, and almost everyone knows about United Health Group, and that's why it's worth so much money today. I mean, if you look at the market cap here, right there, $281 billion, that's a big company. So considering, it's better to look at the 5-year chart, how low it's gone, and how there's clearly a floor at the $300 range. I mean, it's that simple. It's like under $300, it won't last long before people start buying up the dip, and that's been very obvious. And, United Health did definitely have a rocky year, mainly because that guy basically killed the CEO, right? And ever since they were like, wow, UNH is not focused on its shareholders, they're going to be good. Shareholders got worried and they're like, wow, you're not putting out my profits first, I'm going to dump you. So there's a lot of reasons why. But now that it has dropped this much, literally from 600 to 300, having its stock, what is the future for UNH? And this is what we're going to look at. We're going to look at like analyst ratings and where their price targets are, right? So it seems like in general, the price target is slightly higher, with one analyst going as high as 600. Now they're mostly saying 330, but that is for a short term. I mean, if you look a little longer term, it might be higher. Looking here, as you can see, analyst ratings mostly buy, some sell, but it's not always updated. Fair value is $400, which is higher than here. There is no denying that. They are extremely profitable, as you can see, and they don't really miss on their estimated and their actual. As you can see, there's no moat here. Usually there's 2 dots. We only see 1, and that's because it's actually doing great. I mean, that's the thing. Robinhood people are usually buying it. I mean, that's true. Hedge funds are definitely buying it, and a lot of it. I mean, that's when it went so low. They were like, well, this makes no sense. Let's just buy it up. And insiders, even insiders are realizing, wow, we got to start buying this, They're buying it now. They bought it here when it was at 300. Again, like it seems like basically the bottom is in for UNH. Now, the reality with something like UNH, something as large as UNH, and something as stable as UNH, how fast can we expect this to actually move? And that is the biggest question. I mean, let's look at the 5-year, right? 5-year goes from 300 to 600. That sounds about right. It seems like it's one of those stocks where indeed to double your money, it's about a 5-year time frame to get to previous all-time highs. Because again, it got wrecked, the money's gone, and now it has to rebuild. Now there are some government probing issues. There are some reasons why UNH might do poorly in the short term. But looking 5 years ahead, there will be a new administration after the current administration. We don't know if it's liberal or not, but I can imagine that a company as established as UNH, making as much revenue as UNH, honestly has a good chance of staying alive. Now let's look at the revenue really quick, just so that you really understand how big this is. Where is the revenue on this? Let's look at the revenue. UNH. Boom. Yeah, there we go. So annual revenue is $400 billion. So you're imagining that they're clearing $400 billion a year. Now let's look at profits. Profits, UNH. Just so you understand. Yeah, 14.4 billion. Okay, yeah, it went down. I get that. But did it go down so much? I mean, to the point where it should have its price? No. I mean, there's just no denying this. So therefore, I mean, look, no one knows the future, But what we can say is that a play like UNH is a set it and forget it play. You kind of just buy it. You get the small dividends. I mean, it's less than treasury bonds, I am aware. But what's nice about it is that the price might and probably will go up in a very long-term time frame. So you can reinvest the dividends and then just watch it slowly go back to $600, probably in the span of 5 years. Let's be real. I mean, it took about 5 years here. Obviously, there's a different market now, but that's probably the time span. So, you know, if you want a park money stock, and this should be treated like a park money stock, this is amazing. Now, just to get a little more into it, we're going to go a little bit faster here. We're going to go in the Roth. We're going to look in, yeah, let's look at the options. The options are very interesting on UNH if you sell puts. We're going to sell puts. If you look right, oh no, there's not that much actually. Let's look a little out. Yeah, that's because it's expiring today, of course. Let's look at like March, right? I mean, yeah, there we go. So you could take a risk saying that in March 2026, I will be buying UNH for $300 a share, 100 of them. So you need 30K. But you'll be making 2.7 grand doing that. Oh no, is that more? Yeah, no, 2.7 grand. Yeah, 27 is 2.7 grand. So honestly, something like that, if you have the money, you have the capital, I mean, you can even go lower. I mean, you can still clear like 1 grand, you know, and you're buying at 260. I mean, will it go back down to 260? I mean, the chances are pretty low, right? I mean, let's be real. So considering all that, I would argue it makes a lot of sense to play the options with this kind of play, you know? And you can even go a little shorter term, right? I mean, obviously the premiums won't be as good. The longer term, higher the premium, makes sense. There's more uncertainty, there's less decay. But still, even here, you know, you can make 600 bucks selling a 250 put. And look, I would buy this at 250. I'd buy this at 300 personally. I mean, this is my personal thing, no financial advice here. But you understand that the real play here is definitely making money on the options. It's not that UNH itself makes money. The best thing that can happen is that it just hovers around 300. And then every 2 weeks, right? Like, what's 2 weeks here? Yeah, let's do like 21 days. Every 21 days, fine. Yeah, you clear like basically, yeah, 500 to 700 to $1,000, which I personally think pretty good use of money, right? I mean, it's if you get assigned, you're happy, and if you don't get assigned, I mean, hey, you collected the premium. Therefore, I think that this is a very interesting long-term play, great with options, and you can really, since you're holding it so long, I mean, screw it, yeah, just like let's go that far out, you know, let's make 20 bucks on the 251, you know, I mean. This is all possible, and why not? I mean, yes, it's uncertain, but with decay, you know, is it worth the risk? Now, locking up your capital for that long might not be the best idea, but it's just to give you some ideas. Anyways, this was Rex. I just presented to you UNH, and I hope to see you in the next video.